we're going to be talking about parametric insurance and its role in risk management in this panel. And parametric insurance is a type of insurance product that pays out pre-agreed amounts based on event triggers rather than an assessment of loss as done by a loss adjuster. This is commonly used for things like cyclones and payouts depending on what the speed of the wind was rather than exactly what the physical damage was. We've got a great panel to discuss that. We've got Stephanie Powell, who's the head of relationships at Reask. We've got David Schmid, who is head of parametric products at Reask, and we've got Martin Hotz, who is the head of parametric NatCat at Swiss Re Corporate Solutions. And I want to start with you, Martin, because this event is about corporate risk managers. This panel is about parametric insurance. But why does Swiss Re have a unit dedicated to parametric solutions for corporates?
Swiss Re's noble corporate vision is that we make the world more resilient. And now, as we are a large underwriter of NatCat risk in general, the bulk of our business is traditional insurance/reinsurance, but that for some corporates, we can improve their overall resilience by also providing parametric insurance for weather and NatCat risks.
And Stephanie, Reask, you were founded in 2018 to help companies better understand natural catastrophe risks, and particularly tropical cyclones, such as hurricanes, typhoons, cyclones. So how is Reask involved in parametric insurance?
Yeah, so before we start to answer that, which I think David will cover, I want to take a step back and just kind of give you all an overview of what Reask does with hurricane data, because I think there are a lot of applications beyond parametric. And I know a lot of risk managers in this room, while you are UK-based, a lot of you do have exposure beyond the UK. So Reask, as you mentioned, we were founded building tropical cyclone hazard data. One of the key things about our data is that it's global and it's consistent. We also build this data using current climate patterns. So this is really important because there is one globe, one ecosystem, one global climate pattern. So this becomes important when you're developing tropical cyclone models so that your view of risk in one area is exactly the same as a view of risk in another area. We aren't having to piecemeal and rework our models to make sure that that view of risk is applicable in any different region. So it's just the same view if you're looking at one location versus another, which one is more hazardous or more exposed to tropical cyclone than the other. We're also looking at the past. We don't look at the past to replicate. We use that to really understand what we're doing with our data and how that needs to inform our models. I think it's also important that we're building our own data as a data analytics company. We do not want to be platform providers. We don't want to be building these rigorous things where companies are having to then integrate. So we're delivering everything via API. And this is kind of where you have that organic solution. Our background as a company is very strong in insurance. So when you start to look at how refined our data is and how it is a global view and one view, it makes it pair very nicely with the parametric products and how we're able to provide these solutions to Swiss Re and other clients.
And so, you were able to provide data about hurricanes, cyclones globally, the wind speed, which is a really important aspect of doing parametric insurance. Now, David, you've been in the parametric market for some time, but why do you think more corporates are looking at parametric now? It used to be niche, now it's becoming less niche.
Yeah, well, first of all, parametric insurance has been around for a while. Approximately 30 years ago, it started with parametric covers to provide liquidity to finance fast disaster recovery actions, mainly in the public sector space. So the concept of parametric insurance is basically not new. But what is new, and that probably also drives this popularity, is that the abundant availability of weather data, also real-time weather data, that enables to manage fast claim settlement or payout settlement, and then the advancement in the techniques to handle those large data volumes, also the increased computing power. That's also something that we at Reask took advantage of. So we built our models based on the latest technology that enables us to accurately capture the tropical cyclone hazard on a global scale, and that helps us also to refine and define parameters for parametric covers that they correlate well with the damages incurred. And last but not least, what also contributed to the popularity is, of course, the hardening of the insurance market. So risk managers, they also considered other alternative solutions and have realized and appreciated that parametric insurance can be really a smart way to foster the resilience and also to boost actually the return at the end of the day.
So definitely some of those natural catastrophe and weather risks, hard to get other sorts of insurance, and parametric can step in. We've actually got a poll that we can bring up now, and we want to get the audience's view on what are the parametric products in terms of perils that are most popular. And while people are voting on that, you know, Martin, aside from the perils, I know you're focused on Nat Cat, what sort of industries are coming to Swiss Re and asking for parametric solutions?
So in my case, as I work in Swiss Re's commercial insurance arm, I guess the common denominator is that they're companies and they have a high Nat Cat exposure, but then that's about it. So it's across all perils, across all geographies and industries. It can be manufacturing, it can be retail. David mentioned public sector, still quite a popular application of the product, as in the public sector. I mean, schedule of values, sometimes it's more difficult to quantify and abstract where the exposures are. It can also be more mundane. It can be golf courses, beachfront hotels, types of risks that are otherwise deemed to be difficult or unattractive to insure. We also do a large deal with a US-based tech firm. It's not Google, but there we are not providing earthquake cover to the HQ because you can buy regular insurance for that, but we cover the people risk. People are a company's most valuable asset. They tend to work from home more, so we cover where the employees work. So when their lives are affected by an earthquake, then the cover responds exactly to that.
That's a really good link to what we were talking about earlier, and also to the poll where earthquakes got 10% and hurricane, cyclone and typhoon is most popular. David, you know, what's your reaction to that? Do you think people have got it broadly right in terms of what perils are most popularly covered by parametric?
Definitely. I think the typical ones are a tropical cyclone, earthquake, flood, so like those shock perils. I'm a bit surprised that the weather pops up so high here, but that's completely correct. There is also like weather derivatives out there where you, for example, count cold days or hot days for over a certain periods. That's more for the energy sector. In the agriculture sector, you also have such type of accumulative perils such as drought and lack of rainfall. And then there are many other interesting indices out there. With my previous company, I had the opportunity to work on probably one of the most interesting indices. That was the humanitarian impact bond issued by the International Committee of the Red Cross. And this index was reflecting basically the humanitarian performance of 3 rehabilitation centers across Africa. So there is basically lots of room for creativity as long as there is good historic data and real-time data available.
Yeah, and then one of those creative indices is the drop-in Heidi production, which does exist as a parametric product, but not a very popular one yet, I think. So Martin, how do you determine when a payout is triggered for your clients? You know, that's got to be a core part of the parametric proposition.
Yes, and I mean, we don't effectively determine that. That's where Reask come in. As in every parametric policy, you pre-agree the loss under which circumstance, and then Reask are the independent referee who blow their whistle, and when they do, then we basically follow their verdict and pay quite swiftly. So we have no influence on the wind speed data delivered. Reask do that consistently and objectively. I guess the drop in honey production from bees, that's probably an index we could influence. We have lots of flowers in the garden to boost the bee population, but on the wind speed, we have no influence.
And Stephanie, so what does it look like for Reask providing that data? What is the data and how does it work?
Yeah, so there's two main products that we really offer during to help with parametric solutions, and that's pre-event. So before a hurricane happens, they have to be able to price their policies accordingly. So we're able to provide the data at a 1 by 1 kilometer grid data, and they're able to look at the wind speeds based on our tropical cyclone probabilistic hazard models and determine exactly what those payouts will be based on, the factors, what clients are willing to pay, the probability of payouts, and if that is likelihood of the triggering. And then there's the post-event, and this is where I think our data gets really exciting, and that is after the event happens, within 24 hours of landfall, we're able to use our algorithms. We're using flight data, and we're using what is the data center, so the agencies. So National Hurricane Center is the one in the US that I think of, obviously, as the American in the room. That's the obvious one to me. So we take that data, and we feed it into our algorithm, and we're able to create a footprint to get it to them in order to pay out quickly to the insureds as quickly as possible, which becomes really critical. And I think one of the main benefits of looking at parametric insurance is just because of that quick payout. And I think one way to think of how we create this is we have, if you think of it, there's 200 million square kilometers of the Earth that is exposed to tropical cyclones. And when you look at that, you put basically an anemometer at every single one of those locations, and that's what our company is doing. And we're able to basically take those recordings and get them to them at any point as quickly as they need to get the insureds the payout as quick as they can do.
Yeah, and for those that don't like long words, anemometer is like a wind speed recorder, so it's like having a physical device anywhere. But
as I've just learned how to say this past week. So
you couldn't install 200 million of them, so Reask comes in there. David, have you got anything to add about how does it work for the parametric insurer using Reask's data?
Yeah, sure. I mean, when we create such wind fields in the aftermath of an event, what we also do is we look at the NHC data that is reported. That's kind of the benchmark. But they only report the maximum wind speed and the position of the track and the radius of maximum winds. But they do not disclose where those maximum winds are, and that's basically where the music plays or where the heart is of the storm. So there you see the highest losses. And for this, to get this right, we look also at, as Stephanie said, the aircraft reconnaissance data or satellite data, and with that input parameters, which are still only data points, you don't know nothing. You don't know anything actually about the event as a whole. We feed them into our machine learning algorithm model that then creates the full picture of the event. And this algorithm was trained against 200 historical high-resolution tropical cyclones. That was modeled with the numerical weather research and forecasting model, and that's exactly what is needed when you have only like the naked data of the NHC, but you want to get the full picture of a storm.
Yeah, I like that with Martin's example of a golf course earlier. There's only so much that it can tell you as to where the cyclone track actually was and what the maximum wind speed were. You want to know where they were at the golf course probably to create that policy. Mm-hmm. So Martin, why does Swiss Re use Reask data for covering cyclones?
In essence, the parametric tropical cyclone policy assumes that there is that relationship between high wind speed and loss that follows, which is the relationship at work in every vendor cat model. So actually kind of no surprise there. But a lot of the parametric tropical cyclone policies out there are based on you draw a circle around your asset, the center of the cyclone crosses that circle, you pay or you don't, depending on how strong it was and whether it missed the circle or not. So that's quite the crude setup and quite a rough way of going about the wind speed to damage and loss relationship. Now, because it's so simple, it's easy to explain to a CFO, which also has its beauty. And we, however, really see that there's more context needed, which is where Reask come in by exactly being more specific and say, well, this is where the center of the storm was, but at the location of interest, the hotel, the golf course, the port, that's in Reask's view, the most likely wind speed during that event.
Great. And, David, Stephanie, Reask, you're working with Swiss Re, you're working with some other companies in the parametric market and wider insurance. Tell us a bit about that and how can people find out more about you if they want to get in touch?
I mean, yeah, next to Swiss Re Corso, which was one of the first supporters of us, we also have some other early supporters like Descartes Underwriting, AXA, 12 Capital, and to date we are proud that we can count already 20 clients. So they are across the globe, across all the sectors, insurance, reinsurance, engineering companies, MGAs, whatever. And you can get in touch with us by contacting Stephanie, myself, or whoever from the company. Just give us send us an email or whatever.
Stephanie, David, Martin, thank you so much. Thank you.
Thank you so much.